The fourth quarter is up to a good start as the equities market gained 1.5% this week so far, moving the year-to-date returns to positive territory. And I have Ayodeji Ebo, is the head of retail investment at Chapel Hill Denham. He joins me now to discuss the dynamics at play in the equities space. Thank you so much today for your time, Ayodeji. Let's first start by getting a sense of what is driving sentiments for investors and how they are positioning for next week.
Okay, thanks. I think what we've been seeing is interest in some of the, in some select stocks, especially you look at the industrial goods, down to cement, which drove major activity in the third quarter. It's also been moving this quarter. First Bank this week has contributed significantly to the movement we've seen. And if you also recall, 1 or 2 weeks ago, most of the banking stocks, there were significant sell-off on some of those stocks. And when you look at their price to book multiples, we're trading at significant discounts to their historical price to book. So as a result, I think that's spurred renewed interest. So we're seeing renewed interest in some of these stocks. And we feel that the positioning is coming earlier than expected. Normally, as we approach the end of the year, we expect that investors take position ahead of announcement of the full year results. Yeah, while we expect third quarter results to be largely positive in view of improved business activities in the economy, investors would be considering both the third quarter expectation as well as the full year results to begin to position now. But by and large, market has been with the overall market, if you X down with the cement, was really down last quarter, and investors are seeing positions. They are seeing interesting positions because of the relatively cheap valuations of most of these stocks.
All right, Ayodeji, interesting that you put it that way, talking about bargain hunting and driving activity. But I'd like you to look at how the market has performed this week and, looking at what we've seen, the all-share index now flip that corner. Now, year-to-date returns is now positive. Looking down the line, do you think this can be sustained?
Yeah, I don't think this will be sustained. And what we're just saying is that the cheap valuation of some of the banking stocks, beyond let's say the rumor around First Bank that also drove activities this week, we don't feel that this will be sustained. However, as we begin to see third quarter results, it's really going to play a major role in terms of direction of the market. Expectation is that they will be positive. So if we don't see any major disappointment or below expectation, we feel that we may be able to sustain slightly this trend, but we'll continue to. The market is still expected to continue to oscillate around, because when you look at the current situation in the market, fixed income is still relatively high when you compare it to the dividend yield that you get in the equities market. So by and large, for this week, it's majorly some select stocks that are moved. When you look at in terms of market breadth, which looks at the total gainers versus the losers, you would see that it's just a little bit above 1.
All right, very quickly there, just wanted you to touch on, of course, you touched on it a little bit, but I want to be more specific this time, looking at the expectations for the Q3 earnings, but I want to more or less get your expectations from the banks.
Okay, thanks. I think that we would expect that for the banks, there will be an improvement on the Q2 earnings. And what will be the major driver would be the yield environment has been a bit favorable compared to what we had in the second quarter. In addition to that, impairment charges for the oil and gas, the banks are exposed to the oil and gas sector to the tune of about 30%. And with higher oil prices for most of the upstream loans, we believe that would be performing, and that would have to do that, we'll be able to see a bit of write back, or we'll also be able to see minimal impairment charges, which would impact on the bottom line. In terms of OPEX, yes, would still be increasing when you look at it vis-a-vis cost of doing business in Nigeria. So overall, it's really going to be mixed. It's going to maybe likely follow the trend we saw in the half-year result of most of the banks. But just to note that most of the results that will be published this quarter for the banks are unaudited compared to where we have some of the banks published audited. And looking at the industrial goods and telecom sector, we are really very bullish on that sector. There's been sustained demand for their products, and we believe that will drive the performance of their financial results in Q3.
All right, Ayodeji, before I let you go, I just wanted to comment quickly on two things. One is just a quick comment because you mentioned MTN. I wanted to talk about the telecom space. I wanted to talk about the MTN book build currently going, the Series 2 bond, as well as also other market development around the NGF Group listing 1.9 billion of its shares on the exchange.
Okay, thanks. Like you rightly mentioned, this is also part of the series, and the book build opened today. And coincidentally, Chapel Hill is the lead advisor on this transaction. And we believe that looking at the yield environment and the rating for MTN, they will be able to get very good closeout in terms of interest rates, and that would impact positively on their finance costs. They've been relying less on bank loans, and they'll be using more of the conventional capital market funding, the CPs and bonds. And for banks don't give significant long-term loan. This bond is for a 7-year bond, which gives them the opportunity to expand, especially when you look at around network and long-term investments, and they are capital intensive. So it's also positive because we know when you look at the digital penetration, there's still opportunity for the company.